Welcome back to RealPage Economy Express. Let's dive into the latest economic updates. In April, the economy added 175,000 non-farm payroll jobs, marking a slowdown from the 242,000 average gain over the past year. While a slowdown in job growth is usually concerning, in the current economic environment, with the Federal Reserve actively trying to cool labor demand and ease wage pressures, this moderation is seen as a positive development. The unemployment rate held steady at 3.9%, and wage growth moderated slightly, with average hourly earnings up 3.9% year over year. Another indicator of a slowing job market is the initial jobless claims. For the week ending May 4th, claims rose to 231,000, an increase of 22,000 from the previous week's revised level. Turning to inflation, the Producer Price Index for final demand increased by 0.5% in April after declining by 0.1% in March. Over the last year, final demand prices are up 2.2%. Nearly three-quarters of April's increase was driven by a 0.6% rise in the Services Index. On the consumer side, the CPI rose by 0.3% in April, decelerating from March's 0.4 gain, and the annual inflation rate ticked down to 3.4%. Shelter and gasoline costs accounted for most of the monthly increase, while food prices remained unchanged. The energy index jumped by 1.1%. Now, in his remarks on Tuesday, a day before the latest CPI report, Fed Chair Powell acknowledged that inflation has been higher than expected, forcing the central bank to adopt a patient approach in letting restrictive policies work through the economy. He reiterated expectations for rates to remain on hold at current levels for longer. However, considering the latest CPI report, we still believe a rate cut later in the year is possible. On the consumer sentiment front, the University of Michigan's preliminary May reading tumbled to 67.4 from 77.2 in April as inflation expectations spiked. The report cited worries about rising inflation, unemployment, and interest rates over the next year. In summary, the latest report showed moderating job growth and easing wage pressures, providing some relief on the inflation front. However, stubbornly high producer and consumer prices have forced the Fed to reiterate its commitment to keeping rates elevated until inflation is under control. With consumer sentiment souring amid persistent price pressures, the economy faces a delicate balancing act this summer between achieving a soft landing and finally subduing inflation. See you all in 2 weeks for our next insights. Thanks for watching.